Stay on that theme with our first guest this morning, Seema Shah, Chief Global Strategist at Principal Global Investors. Seema, it's always nice to have you with us. And when you see a willingness on the part of investors to do some buying at a time when the headlines are still pretty bearish, what does that tell you?
Hi, thanks for having me on. Look, I think once you've had the kind of magnitude of falls that we've seen, I think it's natural that you start to see some of the technicals signaling that there could be positivity in the short term. So what I mean by that is, if you look at sentiment, it's extremely negative already. You've already seen positioning data show that there's been some move, or at least a significant move towards cash allocations, actually. So it does suggest that there are buyers out there. But I have to say, I think that's a bear market rally. So it's a rally within a longer equity market decline. So this could be a relatively short-lived phase.
If you see a headline today that stocks are moving higher because investors are a little less worried about inflation, or they don't think central banks have to ratchet up rates as aggressively as maybe we thought a couple of weeks ago, do you buy that argument?
No, not really. Look, we do think that inflation will peak relatively soon. You're already seeing a lot of the durable goods demand start to decline. So that's going to take some of the heat out from those inflation numbers. But it will only decline extremely slowly. And actually, we see the US CPI, for example, only coming down to around 6.5% by year end. So that's a really, really slow decline, which means that it doesn't give the Fed any chance to take a breather. So we're still expecting pretty aggressive rate hiking from here, which means that, maybe you have a couple of months respite, but unfortunately the pressure will start once again on the market.
And obviously these markets move so quickly that you can try to build a case for a certain sector, but all of a sudden sentiment can change. We obviously saw that initial leg lower this year of growth stocks getting pounded. In Canada, obviously, we watched a lot of those commodity names outperforming, but as I was referencing off the top, they too have started to hit some struggle points. So what would be your message to investors who are just trying to navigate all of this right now?
Yeah, look, it's undoubtedly a very, very tough environment to try and look through a lot of the data, a lot of the headlines. I think the key thing is that almost taking a step back and looking at what is a 6-month horizon. So the 6-month horizon is that we are expecting to see weaker growth. We do expect inflation to come down, but it will come down very slowly, and it will require the Fed and other central banks to hike very aggressively. Now, specifically within the commodity space, it's a little bit different to the rest of the market. It will inevitably be challenged by the slowing growth story. So there will be talk of demand destruction. But for commodities specifically, there is a structural supply shortage which should keep support up on commodities even over the longer term. So it's a narrow stretch of potential weakness for commodities, but over the longer term, we're still looking at structural forces which should support commodity prices higher.
Okay, so against that backdrop, obviously there's those macro issues that might support some commodity prices. Seema, what are you going to be watching in the near term? What's most important to you, whether it's the next round of comments that come out from central bankers, whether it's just watching some of the overseas headlines? Obviously, we're continuing to watch the uncertainty surrounding Russia and Ukraine.
Yeah, look, there's a whole host of things that I think investors should be watching. So, I mean, from an economic data perspective, it's really inflation expectations. Where are they going? Are they leading us to believe that inflation pressures could at least subside a little bit? Also important to watch the labor market. The Fed is putting a lot of emphasis on where wage growth is going. So we need to keep an eye on that. And of course, consumers. So how much are they spending on credit cards? And is that an indication that there's potential weakness ahead? Or maybe there is very little pressure? And finally, as you said, it's the headlines outside, because one of the wild cards for inflation at the moment is food and energy. And that is very much dependent on how things are evolving in the Russia-Ukraine crisis. So unfortunately, it's keeping an eye on all the things going around in order to create a fuller picture.
Seema, just a final question for you, and it's on companies that are navigating through all of this. There's been this big question about the earnings expectations on Wall Street. Are they still too robust if there's a lot of uncertainty ahead? And obviously, if people are trying to make a decision on what to invest in, earnings is an important part of that, how much a company can make, and subsequently how much a company should be valued at. What's your view on this? Do you think that there's a big shoe to drop when it comes to earnings, or perhaps is that bearish sentiment a little too strong?
Well, it's interesting with the earnings story. It's another one of those things to look a little bit deeper into, because actually, yes, the aggregate earnings story does look relatively robust. And I think analysts are expecting annual growth of 10% for the S&P 500 on the earnings side. But once you dig a little deeper, actually most of that growth is based in the energy and materials sector. And the other sectors are all going through some kind of downward revisions. So there's weakness coming through in some sectors, but other parts of the market are doing well. So it does mean that investors need to really take a strong look at the balance sheets. Where is the stability of earnings coming from? What is a positive cash flow? And of course, what is the size of that balance sheet? Is it strong enough to withstand some of the challenges or not?